Good morning, everyone. Sorry about the little bit of a late start. Had some problems with GoToWebinar here, getting the screen to show up correctly. But welcome to. I know we got a bunch of new subscribers, so welcome to you guys. Today we're going to go over my 3 favorite trade setups using Elliott Wave, and these are all going to be trade setups that I have discussed previously. And so these are not kind of like a look back hypothetical, what I would have done kind of thing. These are real-time analysis that I was doing. And, the market ended up going in the right direction. So just to show that it can work. Now you can go back and access these lessons that we're going to look at. So, and these are in no particular order, but fifth waves are good setups when you have a pretty good, expectation. Like I'll draw kind of the textbook version of what a fifth wave setup would look like. So you got a 1, 2, 3, and a 4. And if you got a completed corrective count for wave 4, and it's holding at, say, a 38% retracement of the third wave, and so it's at good support, and then you see a little bit of an upturn, let's say, then that would be a pretty high confidence setup for a fifth wave rally. But that's going to be one of the setups. All right. And another one is basically a third wave or a C wave, which are pretty much similar in the setup. If you get 5 waves up, let's say, and then you get a 3-wave decline, that sets the stage for a third wave up or a C wave up. So it could be A, B. That would be the C wave part of this, or it could be 1, 2, and that would be the third wave. So 5 up, 3 down, or if it's a larger downtrend, 5 down and 3 up sets the stage for a third wave or a C wave. So that makes for a good setup. And the third thing, which is a little harder to come by, ending diagonals. When those patterns are complete, it really sets the stage for a sharp movement in the opposite direction. So you don't see those too often, but when you do, they really provide some pretty good opportunities for a lot of volatility. All right, so let's start off by looking at a recent setup here in the S&P. All right, and that would be what we're seeing here. Let me get get this kind of a better view, because sometimes I update the counts retroactively sometimes on these running wave counts. So this is a chart taken basically from my US intraday stock service. All right, and what we had was a wave 4 triangle pattern. So that was a very clear ABC down right to the previous 4th within 1 point, just slightly lower than 1 point below that previous 4th wave low. So that was a pretty good argument that this was a corrective decline and that ultimately we're going to see a new high in the S&P. And then after this consolidation here, it became apparent that a triangle was taking place. And then that sets the stage for a fifth wave thrust. And then once you get that, then you get a reversal back down. So that gives you a great roadmap when you see these patterns. And so the way you could trade this would be, once you identify the end of wave C and then D, then you can be looked to be a buyer for wave E. and wave E should hold above the wave C low. So you could have been a buyer at, say, 4,100 with the stop right below there and look for a new high. And then you count 5 waves up out of the triangle to time the next peak. Now, I will say that real time, I kind of thought this move would go a little further. So I was counting it, I believe, as a 1, 2, 1, 2, and then 3. Let me get a, well, there it is. All right, so this is the SPY. This is better because Trade Navigator has let us down with the data. We're not getting cash index data, but the SPY is working. It's the same thing. All right, so originally I thought it was a 1, 2, 1, 2, and this was going to be a third of a third. So the way I manage a trade is if I think a third wave is unfolding, I do not want to see a break of the 618 retracement of the third wave so far. So that level is 417.43 in SPY, and it got down to 35. So that told me that probably that was already 5 waves up complete. So that's where I basically would have exited this. If I was a buyer down here somewhere, I would have exited around 417, 42. So that worked out. That resulted in a decline that's still unfolding. Hard to say where wave 4 is done or not, but anyway, a nice reversal back to the neighborhood of the previous fourth wave low. And now we will see if this development, if this turns into a fifth wave down to confirm a top, or if somehow that's just a quick ABC and it's going up. So the line in the sand for the current bearish count would be the bottom of wave 1 that should not be overlapped by wave 4. So we will see on that. Okay, so let's go to some examples that I covered here in real time. And let me pull up the lesson. So all these, the fall, so the S&P was a more recent, fresh example and came from the stock service. And but all the rest of these are going to be trade setups that I discussed in Trader's Classroom that you have access to. All right, so let's see when this was. January 31st, okay. All right, so this is a trade that I did discussing a whole bunch of technical setups, for PNC Bank, or excuse me, Alibaba. And, this was the wave count. I had an ABC wave 4 complete on January 31st. So I was looking for a fifth wave down. All right, so let's go to chart. So January 31st was right here. And actually I recorded it the night before on the 30th. So that's the data I had basically right there. So I had wave 3 down complete, a nice ABC up, very close to the previous fourth wave peak, so right at resistance. Both legs up were about equal, a little bit shy. C was a little bit shorter than wave A. But in general, we were getting indications that this rally was complete. That there was some cycle downside projections. I believe seasonal was pointing down. So everything was a nice setup for a wave 5 down to new lows. So, basically, depending on how you personally like to trade, whether it's shorting stocks, whether it's buying puts, whether it's selling call spreads, there's different ways of trading it. But the wave count and the technical indicators were strongly suggesting that a fifth wave down was ready to start. So basically we got what looks like a wave 1 down here. We can go ahead and add that label. And then a 2 up appears to be complete. So now it looks like we should see wave 3 of 5 down to new lows. So that was just a classic wave pattern setup. ABC to the previous 4th, C roughly equal to A. And then if you review the lesson, there was the trader sentiment situation in the stock market was getting very overheated. This is a seasonal chart that I often look at and show you guys. The Alibaba seasonal pattern was calling for a big decline. The cycle analysis was pointing down, as you can see right here. All right, and then I had the Peter Eliades cycle tool giving downside projections. So basically, everything was setting up clearly for a move back to the downside. And so you could have been a seller somewhere around here, and then maybe when you counted 5 waves down, you could cover part of the position and allow for a rebound. And now it looks like it's ready to keep breaking on back to the downside. So this was a great, just clear Elliott setup, and it looks like it has more to go. But even this was a pretty profitable move. Looking back on it, if you were to have been a seller right here. All right, so that's going to be one example of setting up a fifth wave trade setup. And it helps to have tools that I just showed you to put the odds more in our favor. All right, so let's look at the next chart. It's going to be Palo Alto Networks, and again, a wave 4 pattern appeared to be complete after 1, 2, 3 AB, ABC X ABC, and believe I have had an intraday chart that I was looking at. All right, so this was the setup. This was the intraday chart setup. By the way, this is the lesson of February 3rd. You want to go back and review the thinking in real time. So we had to look what looked like a completed wave 4 here, and then a 5-wave rally, kind of confirming that the trend had turned back up. Also, prices had gotten above 618 retracement of this last leg down, which if it was going to be, there was going to be further decline, that level probably should have contained any recovery. So you got 5 up above the 618 of the last leg down. That's strong evidence that your trend is up. So after the 5 up, what happened? It pulled back right to the previous 4th, and then bounced, and then gapped up the next day. So now we're pretty confident that this is a third of a 5th wave up that's getting started. And look what's happened since then. But that setup was a very clear, good setup, and was just classic Elliott. Now in this case, the wave 2 was quite shallow, I would say. It definitely got to the previous 4th, but it was a shallow retracement percentage-wise. It wasn't even a 38%. So that just shows you that you don't always get that 618 wave 2 decline. It's in this case, market was pretty strong. It gapped up a couple of days. And so therefore, wave two just couldn't really muster much more than a previous fourth wave low pullback. So that one was a just another classic Elliott wave setup. All right, so let's look at the next chart, which is going to be PNC. All right, so this one was interesting because it really preceded what has become the the regional banking crisis that developed. And this was a great real-time example of where the Elliott wave pattern and technical analysis is, in essence, predictive of fundamentals to come. So just look at this. So we got, this was a wave counting exercise where we were going through the whole wave count. And I arrived at this conclusion that an AB was complete and it was starting a big C wave decline that ultimately could go back toward this low right here. All right, and then I showed you the intraday chart with a 1-2-1-2 calling for downside acceleration. So this trade kind of combines two of my favorite setups, which is a C wave or a third wave, and then a third of a third wave. So, bigger picture C wave, and then shorter term picture third wave. Let's go to that. All right, so basically this was where the setup is shown. So we have an A, B, C up, and with a truncated B wave, or C wave, I should say. C did not go above A here. So that indicated weakness. And then you got a 1-2-1-2, and it looked like it had a long way down to go. So you could have gotten short somewhere around here, around 144, and looked for a completion of 5 waves down from this high right here. So I got a 1-2-1-2, 3 of 3, 4-5, 4-5. So that is probably going to be wave 1 of C. And so, I would say from a trading standpoint, when you get the market going in your direction, like it did here, go ahead and take some profits. And in this case, I would say, take most of the profits when you think 5 waves down are complete, because you're probably going to get an ABC up. All right, it looks like it did maybe a flat wave 2 up to here, and it could be already breaking down in a third wave. So that could be another 1-2 right there. So overall, PNC looks headed lower, but based on that daily chart setup, it was really a high confidence setup for a drop back towards this low right here. 5 up, A, B, and then go wave C down. The rough target for C equals A would be around 90, it looks like. So this is a case where, this was right when the regional banking crisis started catching headlines. And so the wave count was foreshadowing what ended up happening fundamentally. We're not hearing about a regional banking crisis, right here, only when it started to break down. So this was a nice setup. It still looks like it has lower to go, but it was a great, basically a wave setup that worked out. Okay. Let's go to another trade that I did, another trading idea that I gave you back on April 18th. It was U.S. Steel. And let's just quickly take a look at that. And I got this idea. I used some screening software called Dynamic Trend. I'll briefly show you that. So you can screen for these signals. This is the matrix. You pick a daily chart, you can pick up or down. You want to know when the signal goes back 5 bars. And these long-term signals are the best ones. So you just do a scan, and then it will pick out. So like Wells Fargo, American Airlines is a bearish setup. Wells Fargo. So here's the chart of Wells Fargo. This red dot is a bearish signal for Wells Fargo. All right. And so anyway, back here, April 18th, I was looking for, I found a signal for U.S. Steel, X. And that was the idea generation. And then I went and looked at cycle picture, which was negative. And the wave count isn't super clear on the larger picture, but look, this was a nice, go back, show you the, look. So this was a clear ABC rally on a daily chart of U.S. Steel. It went a little bit above the 618, but not much. So an ABC up, and it looked like an impulsive decline when starting. So a third of a third wave was the setup. And then I broke it down to the intraday chart, showing 5 down and a wave 2 rally in progress. This was back on, again, April 18th. All right, so let's look at April 18th. Right there. So Elliott wave strikes again. It worked out quite well. Got a third wave down that's unfolded since that peak. But this was just nothing more than technical signals and applying a classic Elliott wave analysis. 5 down, 3 up. 5 down, corrective up. And then a third wave down has started. And if I had to probably go ahead and label this, it looks like maybe a third wave down into there. And then that was probably a fourth wave. So I would look for a fifth wave down to come. And that would be, looks like, actually, I think I got the wrong degree here. So it would be 5 down, a smaller degree there. And then this would be, wave 1 of 3. So 1, 2, 3, 4, 5 for 1 of 3, and then a bounce, and then a real meltdown, no pun intended, after that. So anyway, this was just a classic wave analysis setup, and it helps to have the kind of screening software draw your attention to trade setups. Now here is a signal, a bearish signal back on mid-April roughly. It looks like a very nice ABC up there, and it gave a bearish signal. So got an even larger degree of bearish signal here. So that's one of the tools I use to find possible trade ideas. So let's see. Oh yeah, you know, the seasonal chart, going back to this. Where was that? Yeah, there's the seasonal chart for US Steel. Look at that. That's a really negative seasonal chart right there. That's the high for the year, and then that's a big drop into like November, something October, November. So a big seasonal down period still projected based on past price behavior in US Steel. So that was another tool that I combined to help me find that trade right there. All right, and let's take a look at another one. Well, this will be the ending diagonal example. And this was from the trader's classroom on April the 6th. All right, so let's go quickly take a glance at that. This was the wave counting exercise on Lockheed Martin. And, you know, was doing the long-term analysis here, and then broke it down to the shorter term at a wave 4 triangle, then counting an ending diagonal coming up out of it. So looking slightly higher to complete a larger wave 3. And the implication is a decline down toward the end of the previous 4th wave. It was around 310, roughly, looks like. All right, so what happened? I got that slight new high, and then look what's happening now. So that was just a beautiful ending diagonal. Look how you draw your trend line from 1 and connect it to 3. Look where it stopped. And that's just beautiful. All right, so what you can do is you get your wave 4, you look for a new high. All right, so let's see what happened when that was. So the new high occurred right here. Right, so that's your minimum expectation on the upside. So then you start looking for signs of a reversal. And so what I would do, if I was looking to go short here, I would wait for a break of the 618 retracement of wave C. Because you just don't know. Maybe it's an A, B, 1 of C, 2 of C, 3, 4, 5. I mean, the fact that it stopped where it did was classic. And if you wanted to be a more aggressive, you could be a seller right then and there. But I would say when it broke 618 wave C, that's 480.41. That would have been a pretty compelling sign to me that the top was in. So that's look what's happening since then. Elliott tells us to expect a quick return to the origin of the pattern. Let's see, did I do? Yeah. So end of wave 4 is 324. So Lockheed Martin could come all the way down there. That looks like a possibly reasonably good target for Lockheed Martin. So you don't see these ending diagonals very often, but basically when you do, you wait for some sign. If you want to be aggressive, sell when the market's hitting the upper trend line or pretty close to it. You can take maybe an initial position right there. You don't want to maybe go all in case it keeps going. But if you want to take a shot at it with a small part, maybe a third of your intended size, might nail the top. And then you just wait for a sign that the 5th wave is over. And in this case, I would have used 618 of wave C. And so now that looks impulsive down. And this, I mean, it doesn't count too well, but it could be a 1, 2, and then starting down in a third. So this trade is, setup still points lower. this was just a nice pattern that, again, you don't have them that often, but when you do, it's certainly a great setup. And so I look for those. All right, so I know we talked, in some of the email that I think we sent out, we talked about how to, thoroughly analyze the setup using the rules and guidelines. And, obviously I've done the work here prior to all this. And it may seem kind of easy on the surface, but of course, I've been doing Elliott Wave for decades. So if you're a little bit more of a new practitioner, what you need to do is use the rules and guidelines to make sure the wave count you're going with is correct. Is it based on good, sound wave count? So in the case right here, in the triangle, you want each leg to be fairly proportionate to the prior leg, which it was. You want wave E to hold above, in this case, wave C, which it did. All right. So that count, and if we were counting Lockheed Martin back here, that would have been how I would have counted it, I guess. And then got the new high, and then it evolved into an ending diagonal. So you draw your trend lines here, and you need to make sure that most ending diagonals, the 5 is shorter than 3 and 3 is shorter than 1. So you need to make sure that 5 does not exceed the length of wave 3, because that would blow that count. So you have to know the rules, and you have to apply them correctly. And that's the way you can gain have a higher confidence trade setup when all the rules and guidelines are being adhered to with your count. So that's what you need to do. As far as entry, stop, and exit, I kind of covered that, I think, in most of the cases. Again, you could have sold when it hit the trend line or got close to it. You could have sold when it broke 6 when it had this, then put a stop above the high. And you could have taken partial profits at some point, like when it kind of broke the downtrend. Like, let's just say you draw a little downtrend line here after this decline got going, and you say, okay, I'm going to take partial profits if this waterfall decline doesn't continue. So you could have taken some partial profits when it broke above that trend line. Most of us are trading more than one share of stock, more than one option contract. And so I think I did a lesson a month or two ago discussing scaling in and scaling out. I think too many people have the bad idea that you have to be either all in or all out. And I don't like that. I think from a trading standpoint, take part of your position off when you've got a very nice profit established. That way, if market reverses and goes back against you, then you are still likely to have a winning trade on your hands overall. And so you could be kind of temporarily right, but bigger picture wrong, and still make money. So that's where booking some profits at some reasonable logical level is just good trading habit. And if the trade keeps running, you still have exposure, and you can let that kind of home run keep playing out. So that's definitely something that I recommend. I mean, you can trade kind of like longer term and shorter term. That short PNC Bank around here, take some profits after this straight down move kind of slows down. But you might want to hold a larger short position, longer term short position, looking for further decline down towards this previous fourth wave low. So take some money off the table, after you've had a good gain, and then put a wider stop on the remaining position and give it some room and let it see if it can go to your target longer term. And, check on it every week or so type thing if you want to. Because this is a longer term move that will take time to play out if it's going to get there. So, I always use, Fibonacci is one of the things that I use a lot for stop, basically, and in some cases entries. So, like if I was bullish Palo Alto here, and we get this ABC down in the previous fourth, and we get a gap up, all right, and I say, well, I thought we were going to have a deeper two, but I guess that was it, so I might be a buyer right here. And you could use either one of two approaches. You could use a really tight stop, say, okay, I don't want to see it get below the 618 retracement of this third wave up so far. So you could use a stop right there, right below there, 618, 159.51, one tick below. That would have worked out perfectly well. And if you wanted to give it a little more room, you could say, well, maybe, just maybe, it's one up, A down, and this B of a flat, and it's coming back down here and C of a flat. And so you wanted to give it some room, and you might want to put a stop a little bit below 618 of this whole thing. So it just depends on your level of aggressiveness, risk taking, and how short-term oriented you are, and ability to kind of make an adjustment if you need to. So if you're in front of the screen all day, you can be a buyer here with the stop below the 618. And if you're more of a longer-term person and check the market at the end of the day, you probably could have been a buyer here with a stop below 618 there. So that's just one possible scenario for that, how to do that. And let's see. Going back to the Alibaba example. Once it kind of broke down here, that was a pretty good sign that wave 4 was complete. You might want to say, okay, let me give it a little bit of room above this high here. That high there is 121.30. Might give it a room. Might could put a stop a little bit above here, for example. I like to do options a lot of times myself, especially when we're talking about shorting individual stocks. You run the risk of some kind of takeover happening, or something where the stock gets squeezed on the upside. And you don't have that problem with indexes, but you can have it with individual stocks once in a blue moon. And so that's why having some kind of upside protection makes sense. So you can sell a call spread, let's say. So you might want to sell like a 126, 127 call spread. That way, if it goes back up here and touches that resistance, your call spreads will still be out of the money. So there's different ways to handle it. You can, but once you get a decline established, then I would look to use maybe the 786 retracement of the decline so far. Because, in the early stages of a move, sometimes wave 2, let's say you have a decline going here and you're worried about a wave 2 bounce. So you can put a stop above the 786, say at 117.44. Because sometimes second waves early in a move go a little bit deeper than 618. So I'd like to give it a little more room in those cases. All right, so that's kind of the way I do it. And then, like I said, I'll count the short-term pattern. And if it looks like a 1, 2, 3, 4, 5 down, I would either trail very close stops or just exit part of the position and wait for a bounce, and then look to reestablish that position. So, take partial profits when you have them. That gives you the flexibility to add more. But if the market keeps going in your direction, hey, you still got a winning trade on your hand. So that's a very enviable position to be in. All right, so I think that's pretty much what I wanted to cover. So I will take questions now. And if you have any questions on what I've just gone over, then that's fine. Go ahead and type the questions in. All right. Okay, just going through these in order here. Got a question from Amit about Apple. And, I keep an eye on Apple. I do tend to show the Apple chart once or twice a week on the intraday stock service for a couple of reasons. One, it's such a huge stock that will impact the S&P and the NASDAQ because of its capitalization. And secondly, because a lot of people trade it. And third, I guess also the wave counts tend to be fairly clear. At least they have been lately. This looks like a fourth wave decline, like an A, B, C, X, A, triangle B, C. And this looks like a 1, 2, and then we're somewhere in a third wave. But maybe I'm actually counting it as a 1, 2, 1, 2, 3, 4, 5, 4, 1, 2, 3, 4, 5. So actually, it's not. It has kind of the look of an ending diagonal, but it's not. Let's go to an intraday. I got to get more data on the chart here. Okay, so 1, 2, 3, 4, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. So it looks choppy and overlapping, but it's not. Let's see. So 1, 2, 1, 2, 3, 4, 5, 3, 4. And then 1, 2, 1, 2, 3, 4, 5, 3, 4. No overlap there. 5. So, yeah. And if you were to draw like trend lines here, they're not wedging. Looks like it's slightly expanding. So yeah, looks kind of like an ending diagonal, but I don't think it is one. Nicholas asking, can A be a WXY? Yeah, like A of a triangle can be a double zigzag, or A of a flat can be a double zigzag. Yes. How do you access the seasonal charts? Well, I get it through Trade Navigator. Like I can pull up a seasonal chart of Apple here, and I will just click seasonal analysis there, daily, and then boom, here it comes. So that's one of the good features of Trade Navigator. Average trend is what I'm concerned about. This is like spaghetti models and the hurricane forecast. I uncheck all cycles. The blue is this year. The green is a typical up year. The black is the average year. And the red is how it looks like when it's in a decline. So I'm really looking for average trend. If you wanted to look at the bullish trend, it's going to be kind of similar. Probably not too many down years in Apple. So most bullish trend is going to look a lot like this one. See, it has the same general shape. So the blue line is today. So Apple has a down seasonal period that's due right here. So this is a very good feature. This seasonal charts on Trade Navigator are available for every symbol, apparently. Stocks, commodities, overseas markets, indexes, whatever you want to look at. There's other services out. Seasonals are becoming a little more popular now. There's another one, I think, website that I subscribe to. I think it's superseasonals.com. I mean, so, and then Motive Wave, we got them to add seasonal to that. This seasonal apparently just takes all the history. Goes back to the first full year of data, I believe, of any particular instrument. And their method is not disclosed, but basically, I guess, they take the average movement percentage-wise of every day of the year. And so if it, May 25th has an average decline of 0.03%, then that'll be reflected on this chart. 0.03% decline. They just string all those data points together, and this is the seasonal trend. So yeah, seasonals, I always say, are kind of like vitamins. It might help, and it probably won't hurt if you use seasonals, because it's not like you're buying a stock when the RSI hits 95. That probably wouldn't be a good strategy. But looking at this, if the seasonal tendency in the past has been for a decline in a certain period, then it's probably not going to hurt to look at it, and it might be right. It's never going to be right all the time, but you want to have seasonals combined with other tools as well. All right, so let's see how many questions you got here. I'm going to try to get through these as quick as I can. Don't want to go too much past the top of the hour. So JP is asking about CCJ. You say CCJ is a bullish or bearish unit? Want to get below? Take a look. What's wrong with this? Go. It looks like an A, B, C, D, E right there. Now let's see. You want to argue A down, B, C, D, E triangle, bearish triangle. That's possible too. It really hinges on how you count this. Looks like it may be a 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. I mean, that's not the most compelling 5-way decline, but it could be. It could look like that. I mean, it could be counted that way. So I might just want to wait for a breakout of either there, or maybe there. Wait for a breakout of one of those levels before I would try to play the move. So, yeah, I mean, that's just a very cursory analysis. Obviously, I haven't done a long-term look at it. But yeah, you can make a case either way. So I probably just want to see a little bit more movement. Is the dynamic trend alerts and sessional chart included in Trade Navigator? No, dynamic trend is a separate piece of software. I did an options course a couple of years ago, and this is a very options-oriented software. So we got access to this back then, and had a special promotional deal, 3-month trial, I believe. I'm probably going to do the options course again in the next couple of months. We're working on that now. But no, this is a 7-piece software. Dynamic, just Google dynamic trend, I guess. If you want to, look into it. I like the software. These signals are great. You can look at intraday charts, and you can get these signals on short-term time frames. Like, look at that. Just gave a couple of bearish signals on the SPY, 15 minute. So, and they tend to be pretty accurate. Not like there, you had a little bit of a drop there. You didn't have a huge move against you. That was a good low that held for a while, only a slight move down, right? That low held for a while. These shorter term signals aren't as accurate, but the blue triangles and the red dots are the medium and longer term, and they tend to be pretty accurate. So I do like the software. Why do trend lines on ending diagonals cross over the price area? Yeah, it does sometimes. Why do they? It just does. I mean, what you do is you connect waves 1 and 3 and extend it. You connect waves 2 and 4 and extend it. And sometimes prices will go outside those things, those trend lines. I don't like to see it persist too long. Then it really raises questions about the accuracy of the count. But a little bit of outside movement is acceptable. All right. CH says stop loss place at 618 level. If one is trading wave 4 and going into wave 5, you buy when the broke 618 of waves 3 and 4. So I think if I understand the question correctly, let's just use this. This is not a perfect example, but 618 of 3 through 4. So if you would take length to wave 4, you break 618 of that, that would be a pretty good sign that the fifth wave is underway, I would say, yes. But, I was turning bearish right here. I didn't really want to wait for a move that far down. Because you already looked at what happened. It didn't go a whole lot lower before it had a nice bounce. So I try to be a little more anticipatory in this. NVIDIA, yeah, it's kind of a historic. I think I heard today that it was the biggest dollar increase ever in history. However many billions of dollars this represents. Clearly that looks like a 1-2 there. That's another 1-2. And then maybe that's another 1-2. So is it going to do 4? It could do 4 5s for a while. I would say the most bearish count I could come up with is 1 2 3 4 1 2 3. So it still require 4 down and a 5 up before it tops. On the other hand, if we were to get a gap down and you get an island top, if it were to open tomorrow down here, or if it stays up here for a couple of days and then it gaps down, that would be a bearish sign. I like to really look at island tops. So yeah, I don't know as far as targets goes. I know Jeff had a thing called reverse Fibonacci, that you take the length of wave 4 and you multiply that by 1.382 and add it to this. So that would be about right here. So that's a 1, not just eyeballing it. It could go that high. That would be one possible target. You can go back to my long-term count that I did and look for, the 3 targets for fifth waves are 5 is 618 of wave. If the third wave is extended, 5 equals 618 of wave 1. And if that's reached, then you look for 5 equals wave 1. And if that's succeeded, you look for 5 equals 618 of 1 through 3. So that's how you come up with targets. And I haven't done it here for, video here. Maybe I will. FCX. Sean is asking about FCX. That's kind of like 5 up right there. Like maybe an ABC down, 1, 2, 3, 4, 5 up. ABC, X, ABC. But it's clearly in a downtrend. I would like to see it if it's near the 618. So if it can kind of stabilize and turn back up, I might be bullish. But considering my larger, increasingly bearish view of the market, I don't know if I want to catch the falling knife right now. Costco has earnings tomorrow. Okay. I mean, I've done this stock. It looks like a nice triangle on the bigger picture. So overall, I'd like to think it's going to bottom around here and go up to new highs. A, B, C, D. And this could be E, could be turning into a triangle. A, B, C, D, E. And then it goes. So far, it's holding that trend line. So I think it resolves higher, but it may have to go sideways for a little bit longer. What's the difference between ABC and WXY? Nothing really. I mean, an ABC can complete a correction. A WXY can complete a correction. Sometimes a correction turns into 2 ABCs. That's fine. That's allowable. I mean, it's kind of a short answer, but that's pretty much it. The answer. They're just a different form of corrective pattern, but they're still correct. James, you want to know about the SPY? I'm not sure what you're asking about the SPY. Apple truncated 5 up 5. No, I think it's 5 up. I don't think the fifth wave was truncated, Eric. It looked like it was 5 up, done. You don't like my labeling in PNC. I like my labeling in PNC. It worked out well. No reason to go back and change it. When you have a wave count that's working, you stick with it. So yeah, getting a question about oil. So I think the last couple of questions here. I want to wrap this up. Yeah, oil has kind of we had a nice little island bottom there. This decline today is sort of pressuring the bullish view a little bit. I mean, you could argue that it's an ABC up, and it needs to bottom pretty quickly here. It's broken 618 of this leg, of this last leg up here. So you could argue an ABC up. The internals don't count too well. But if oil doesn't turn back up today, then I'm going to worry it may be headed down to a new low. You ever buy short into earnings, or do you wait? Earnings, look, that's a good question. And for me, I have no edge when it comes to predicting earnings, generally. I mean, sometimes, yeah, the earnings come out and the market goes, where the wave count said it was going to. But if the wave count is not just pound the table clear, and you have a single zigzag, and it could turn into a double zigzag, or it could go up, it could go, back the other way, then it's a coin toss. And as LA Wave analysts, we don't have an edge predicting what earnings are going to be. I don't have an edge. Only if you're inside the company do you have an edge, or if you have some external way of determining a company's earnings. So since it's a coin toss, I tend not to do anything. Sometimes I'll sell out of the money options, do like out of the money iron condor. But sometimes that doesn't work out either. The market gaps huge one way. So it's too much of a coin toss and you don't have an edge. So basically that's not a game I want to play too often. How much does your impact overall market count affect your stock count? Not that much. I mean, if I have a confident view of the S&P up or down, I will tend to look for stocks that are pointed in that same direction. All right, so that's definitely something that I look for. All right, and then one more question about TLT, which is the bond ETF. It looks to me like it could be heading down in a fifth wave. But, you know, 1, 2, I don't know, 1, 2, 1, 2, 3, 4, 5, 4. I haven't really looked at it, but you know, maybe is that a possible triangle? So it looks like it could come on down to new lows. We'll see. All right, that's basically going to be it today, guys. I hope you got a lot out of this. You know, by all means, if you have other questions, please send them in. I totally welcome lesson ideas. Sometimes that's the hardest part of this job, is coming up with what to talk about. And so if there's certain questions about Elliott Wave or trading that you have, I'm happy to take those suggestions. I can't do every single one of them, but if one comes up several times, or if it makes just a lot of sense, I will definitely, you know, do that. And how do you reach me? I guess, well, you can leave a voicemail. I get those. You can look for an email. Had some apparently denial of service attacks or something, and they've so customercare@elliottwave.com is one email address. So you know, just fill that out. Online request form. You know, let's see if there's any other. Yeah. If you do leave a voicemail, you know, tell me what your name is, and if you want to reply, email is better, because the voicemails, I don't see your email address. All I hear is the voicemail. So but either way, feel free to reach out. I have no problem going through emails. I don't get that many, so it's not a hard job for me to look at them. So please, you know, send in your ideas. Good to know what the subscribers are kind of, you know, wrestling with when it comes to trying to learn how to trade Elliott. All right, that's it for today, guys. Have a great long Memorial Day weekend, and we'll be back at it next week here.